2023 has been a strong year for leisure spending as Americans continue to splurge on experiences. Cruise lines like Carnival, they've enjoyed roaring post-pandemic demand, with folks eager to set sail. The stock up 58%, almost 60% now here as we're taking a look at that year over the past 52 weeks, and demand showing no signs of slowing down. Several Carnival brands saw record bookings over Black Friday as folks prepare for 2024 and 2025 travel even. But Vail Resorts hasn't seen the same upward momentum, even as the upcoming ski season saw an increase in bookings. Headwinds from weather still weighing on the company's bottom line. We're joined now by Paul Golding, who is the senior U.S. lifestyle payments analyst over at Macquarie Capital. Great to have you here with us. First and foremost, Paul, when you kind of evaluate these two different parts of the experience economy, where is there kind of continued strength that we should expect, and where is the consumer perhaps wavering on the ability to spend into some experiences?
Yeah, great to be with you both. I think when we look at what's been happening across cruise versus ski, for example, we didn't have the inbound testing requirement for COVID come off in the US until August of last year. So there's some late tail international reflation that we've been seeing throughout this year. And of course, the majority of the EBITDA generation for Vail is North America resorts. And so as we look at cruise has been benefiting, in our view, from some of these dynamics on late international reflation and the value proposition that cruise represents versus land-based alternatives. We heard during the Q3 earnings call at RCL that they continue to see a 35 to 40% discount versus land-based, whereas pre-COVID that discount was about 10 to 15%. So as we look at that business, we see an opportunity for cruise to continue to drive price and attract demand versus Vail, which we're neutral on and have been neutral on, which tends to be a more premium product and is domestic and also has other structural things going on like weather volatility. So for example, most recently, we took our target price down $10 from $235 to $225 on the back of a late Tahoe start and weather volatility over the Australian winter. So a lot of different dynamics here, some demand driven, some supply driven, and that drives this dichotomy in our outlook.
So Paul, then what do you think Vail needs to do in order to boost that demand? Obviously, they cannot control the weather. So when you take a look at some of the pricing trends, some of the demand that you're seeing early on for some of the the season passes that they are able to sell, what can they do then for the longer term in order to boost some of those sale numbers?
Well, their pass sales have been up. For example, they noted at the most recent press release that their pass units were up 7% and 11% growth in dollar terms. But the capital plan is supposed to help with some of this by deploying more snowmaking machines. They did take a significant price cut, about 20% a couple of years ago on the pass base, and have been growing it back from there in terms of price. And they've also introduced a much broader slate of pass products. So for example, instead of just an unlimited or a 7-day or a 4-day, there's also now single day, 2-day, 3-day, 5-day, 6-day. And so as you look at that slate of products, it could help drive uptake from those who are maybe not as able to ski in terms of day count, or who maybe are not as avid skiers in general, but want to pull forward a few days and pre-purchase them. But a lot of this also just involves skier uniques and growing the skier base. So some things like offering ski school, which they do, and their programs to bring in younger skiers could help over time. It's just competing with weather volatility and snowmaking difficulty from a natural perspective in some markets.
Paul, I'm so glad you mentioned all of this. We actually had the opportunity to speak with world champion and gold medalist alpine skier Lindsey Vonn at Yahoo Finance Invest, and we asked her about whether or not it's getting too expensive skiing, especially here in the U.S. compared to some of the European counterparts and resorts there. Just want to play a clip of this and we'll get your response on the other side.
To take a whole family skiing in the United States it's a small fortune. I think in the US it's probably just going to continue to get more expensive because people are coming and it's profitable, and so if that's the model that works, it's probably going to stay.
So, Paul, according to your calculations here, what is the tipping point where some of the companies that, as they've been regarded by the ski community, have kind of formed this duopoly in the mountains here and among the resorts? And I can't even think about learning to ski at this point because it costs so much. So what is that tipping point for many households and those who are looking to perhaps grow the base of skiers, but at the same time just can't afford it or justify the cost?
Well, we can only speak to Vail, which is what we cover. But skiing is very expensive relative to other leisure activities. For example, cruise, as we mentioned. But there have been other strategic attempts that Vail has made to grow the base, which is acquire lower lying, more casual drive up types of resorts. For example, the Peak portfolio. Has that been a significant driver? We have to see more of the demand base sort of trickle through from that. But for us, the cost of skiing is something that keeps us favorable on things like cruise and neutral on Vail. And I think over time, the question becomes also how do they leverage promotion, if they even want to bring in skiers for the first time. This cohort of consumer tends to be higher end for Vail. And so in some ways that's helpful because it's a resilient consumer, and they have mentioned in the past that that's favorable because it drives consistency in revenue period to period or year to year. But in terms of growing the base, that's been a detraction in our thesis from getting more positive on the name, simply because of the cost of entry. So not sure what the tipping point may be. There are levers to pull. There are other crosswinds that are out of their control, but some of this has to do with just the core demo in terms of the high-end consumer that has the affinity for going to Vail Resorts and engaging in ski activities.
All right, Paul Golding, great to have you here, Senior U.S. Lifestyle Payments Analyst with Macquarie. Thanks.